Well, good morning and welcome. Thank you all. And for those that are also joining us virtually, appreciate those that are here in person. Looking to be a very exciting day. And so thank you all for joining us today at our first inaugural Financial Technology Association Summit. So today, just going to touch, it's going to be an exciting day with a lot of different speakers, panelists, and others. FTA was founded about a year and a half ago. And it was to really kind of focus the industry, have an industry voice here in Washington and tell the story of Fintech's positive impact on consumer, small businesses, and the economy. As you'll hear throughout the day, Fintech is a crucial driver of competition and consumer choice, and consumers increasingly prefer and trust Fintech products. We just released a report today, hopefully many of you have seen it, called Fintech Impact by the Numbers, showing exactly how Fintech put American consumers at the center of their finances and manage their money responsibly. 8 in 10 American consumers use Fintech to manage their money in 2022. Half of Americans use Fintech apps to manage their finances daily, and the average consumer uses 3 Fintech apps. Fintech makes it easier for 70% of consumers to pay their purchases and build better financial habits. Trust is also high among Fintech users. Consumers who know and use Fintech brands trust and like them, according to recent research by Morning Consult. Well, today we'll touch on positive impact of Fintech, how it's transforming people's lives, and a packed lineup with the most crucial policy issues, touching on things such as access to credit, consumer data rights, faster payments, bank Fintech partnerships, and much more. We'll also ask, as you see on the sides, we'll also ask some questions throughout the day about your own experience using Fintech. You'll see some QR codes that pop up. Please feel free to zoom in with your phone and be able to capture it and enter in the various questions and answers for it, and we'll be collecting that and showing those results. We're also thrilled today to be welcoming many regulators, one from the state, one from the federals. We have Adrienne Harris, top financial service regulators from New York, along with Rodney Hood from the National Credit Union Administration. We'll also hear from members of the Biden administration, including Elizabeth Kelly, Special Assistant to the President on the National Economic Council, and Congressman Warren Davidson, ranking member of the Fintech Task Force at the House Financial Services Committee. From the industry side, we're thrilled to be welcoming TrueWork founder and CEO Ryan Sandler, along with executives of FTA member companies such as Klarna, Plaid, Zest AI, Wise, and Blue Line. Our members welcome modernize financial policies that reflect innovation in the marketplace and give consumers access to lower cost, easy to use, and transparent financial services. Today, we want to also thank our sponsors of this great event, Intuit, Marqeta, Klarna, Stripe, Zest AI, Morgan Lewis, and Plaid for their generous support to make this event possible. Thank you again for coming, and at this point, I'll recognize our partner with us, Bennett Richardson from Protocol.
Thanks so much, Penny. Such an impressive lineup, and I think really speaks to, as you all know, I don't have to tell you this, you're here today, but the such a transformative power that financial technology has in the world, and we're thrilled to be partnering with FTA on this inaugural summit, bringing together such an impressive lineup of regulators, policymakers, founders, industry leaders to have this important conversation. Financial technology has this power to transform just about every corner of the global economy and unlock such opportunity. And I think that's why it's such a thrill for us at Protocol and at Politico to cover this space. It's such a dynamic space, the fintech industry, thanks in large part to FTA and groups like it, rapidly becoming a critical player, an agent of positive progressive change in Washington, and a space that we really enjoy covering. You'll hear from a few of my colleagues later today from Politico and Protocol about their outlook on fintech in the coming year, and we're thrilled to be partnered with you today. So excited to hear for the next conversations.
Yes, thank you.
Thanks so much.
Please welcome Adrienne Harris, Superintendent of the New York State Department of Financial Services.
Well, welcome. We're thrilled to have you. I know you've got busy days these days, so we appreciate you carving out time to be with us today. For those that don't know, Superintendent Harris is one of the nation's foremost financial regulators, supervising over 3,000 banks, insurance, and other financial institutions with assets totaling over $9 trillion. She brings a wealth of experience not only from the public sector, but also the private sector as well, with some of the work you've done. Just a few highlights I'll go through. She served in the Obama administration Special Assistant for Economic Policy for the National Economic Council, Senior Advisory to the Deputy Secretary of the Department of Treasury. She was Associate at Sullivan and Cromwell, served on the board of the Financial Health Network, advisor to several fintechs, and even started her own insurtech company as well. She's earned her JD from Columbia Law, her MBA from New York University, and her BA from Georgetown University. So a wealth of knowledge, a wealth of experience, and really excited to start this conversation with you today. So for those that are both maybe in the audience and also virtually, tell us a little bit about they might not know what the remit of DFS. It is quite large.
Yes.
And so would love for you to maybe give us a sense of what that remit is.
Yeah, absolutely. Well, thank you so much for having me. It's great to be here with you all in person. New York DFS really is a preeminent financial regulator, and it's amazing because it's both a local and state regulator, but given its remit, it is a global regulator as well. I think a lot of people don't know we regulate 80 foreign banks, for instance. We regulate 120 state-chartered banks. We regulate thousands of insurance companies. We're the group-wide supervisor for AIG and MetLife. We're really the only prudential regulator with explicit crypto authority, and I know we'll talk about that more today. We regulate health insurance, pharmacy benefit managers, debt collectors, mortgage servicers, student loan servicers. So you name it, we regulate it. The department came about 11 years ago. It's the combination of what used to be the state banking department and the state insurance department, and they were combined, and then added to banking and insurance was financial services. So it was meant to really cover everything else in the space, and indeed, that's what we do.
So you're sitting there at home, and all of a sudden you get this call from the governor's office saying, we'd like for you to consider this role.
Yeah.
What was it about DFS that made you want to take this role, and what you thought you would bring to it?
Yeah, I think for me, first, having worked for the first Black president, I thought, well, how cool would it be to work for the first female governor of New York? And she's such a thoughtful policymaker and elected official. So we were sitting and talking about what we thought the agency could be, the financial regulator in the financial capital of the world that is at the same time local and global. And I expressed my view that I thought the department had a lot of untapped potential, especially given where it sits. It really does punch above its weight as a financial regulator. And she said, and I was sort of riffing and just telling her, my thoughts, and she asked me to step into the role. And since I've been there, we've really made a lot of changes and improvements to the department. I think historically it has been known as an enforcement agency, and it is certainly still that. We still, bring a lot of enforcement actions. We've reoriented a lot of the enforcement work to be more oriented around restitution rather than just penalties, because for me it felt like I want New Yorkers to understand what their government is doing for them, and penalties are important when companies have broken the law, but it's more important where we could put money back in New Yorkers' pockets. We were doing so. So this year alone, we've put about $133 million back in New Yorkers' pockets, not penalties, just restitution, which is about an 85% increase over all of 2021. But there's this incredible rule writing authority. There's this authority over crypto, which at the time I knew DFS was really the only regulator with real crypto authority. I didn't know how meaningful that would be. But certainly we've established ourselves as a leader in that space and spend a lot of time with federal regulators, international regulators, policymakers, talking about the success of that framework.
Well, we'll ask that question. Yeah. I think the one that is on everybody's mind right now, we see the headlines right now on FTX. And how do you, as one of the foremost regulators on the crypto industry, how have you viewed, or I don't know what all you can say, how do you view how is this just shaping kind of how you think about regulating crypto, some of the activities that we're reading about?
Yeah, so I think if you were to start with a blank slate and ask yourself, what does good look like in regulating this new, fast-moving, volatile space, I think what you would come up with is the framework we have at DFS under the BIT license and the limited purpose trust charter, where we have capitalization requirements and quite onerous ones, to be clear, both on the crypto side and for stablecoins when it comes to reserves. You would say you wanted cybersecurity standards, which we have. You would say you want AML, BSA standards, which we have, right? And the list goes on and on of the things that you would say you want controls over consumer disclosures and advertising and marketing, which we have. So it really is a robust framework. I think it's important that we have the full suite of tools at our disposal too. So we have rules on the books. We have explicit legislative authority. We've written rules that are on the books. We have guidance out there that helps explain the rules and set our expectations for the ecosystem, for the community. And of course, we have the ability to bring enforcement actions should the supervisory framework that we have not get companies doing what they're supposed to do. But that ability to write rules, examine and supervise, bring enforcement actions really does enable us to regulate the space, I think, very well.
And do you think that applies to the federal level? Because there's a lot of conversations now about which part of the alphabet soup might be regulating the industry. Do you have a point of view on that, or what can you bring to the federal side to what you all have learned?
Yeah, I mean, I think for us it matters less the who, because I think when you look at these instruments, they're shape-shifting in a lot of ways, right? So there are things that today might behave like securities, but as the business model changes for a company, right, they might then become more like commodities. And so you need a regulatory framework that's sufficiently flexible to account for that. And I think it's another advantage that we have virtual currency authority, and we don't have to shoehorn it into an existing framework. I think there are lots of things to be taken from existing frameworks and places where those frameworks absolutely make sense. But we spend a lot of time talking with regulators, law enforcement, policymakers here in DC and around the world about what we've learned, the importance of capitalization, which we're seeing play out now. In New York, we don't allow lending of customer crypto assets.
Yeah.
Right? It proved to be a good decision. But I would say too, the regs on the books are only as good as a regulator's ability to operationalize them. I think it's not a secret, right, that historically the department had trouble moving quickly enough to bring folks inside the regulatory perimeter. When I got to the department, there were very few FTEs in the virtual currency unit. Since I've been there, we've grown it to a team of just over 50, and we've got more to go, and that's in the last 14 months. In a job market that's pretty tough. It's hard to compete with the private sector and stock options and other things. And we've really put together a wonderful team of experts from the private sector, from other regulators, from academia, and have these robust application teams, supervisory teams, enforcement teams, cyber and AML experts when it comes to crypto. So it's really a tremendous team now led by Pete Martin and Caitlin Azaro, who heads research and innovation at DFS. So, we're working to continue to make sure our operations run more smoothly, but I think, the framework has proved to be a good one.
And speaking just a little bit of the nimbleness of the marketplace and trying to stay ahead as regulators, as you know, the rulemaking does get long and sometimes innovations occurring. Do you foresee any changes right now in how you're approaching BIT licenses or any changes that you will be making? Yeah,
I think given what we've seen over the last several months, anybody who would be advocating for a lightening of regulatory standards, I would say, is not reading the room well. So I would say for us, we're always thinking about how to make improvements. And I think indeed the ecosystem has seen that with our added transparency, with the blockchain analytics guidance we issued this year, with the stablecoin guidance we issued this year. Those were all requirements that existed in the individual supervisory agreements we have with companies, but we thought, let's lift them up, let's make them transparent, let's make the expectations clear for people. I certainly think there are other things we're going to look to do vis-a-vis the BIT license and the limited purpose trust charter framework. But it won't be too light in standards, just so everybody knows.
Understood. As you said, your remit is big, and in your first 100 days, you would say you've been quite active. Yeah. And would love just to share for you to share some of the activities. You were the first to enter into climate as a regulator. Just talk a little bit about that, maybe first 100 and now a little bit beyond, and some of the things that you did to shake up the agency.
Yeah, well, I talked a little bit about reorienting the enforcement team. Of course, we still, again, as I said, bring penalties, but I think even more important is our ability to require remediation of companies, and then again, where we can get restitution for consumers. And the team has done such a wonderful job of that. And in the vein of no good deed going unpunished, I'm just going to look for them to top that now every year. When I got to the department, it was drastically understaffed. It still is. We really don't have the resources we need given the breadth of our remit. I actually went to the legislature, to the governor, made the case for more funding, and actually got the department fully funded for the first time in its history. So just this calendar year so far, we've hired over 150 people. We've promoted about 140 existing DFS team members, and we are hiring like mad all the time because in the financial capital, you need a financial regulator that matches the industry, that the industry deserves, that New Yorkers deserve. So that's really been the big thing, is how do you make this place run well so that it is a sustainable agency befitting of the financial capital. We redid the mission. It was an institution created in the wake of the financial crisis, and so it was, the mission really spoke to that time. So we rewrote it so that it's more designed to foster an equitable, transparent, and resilient financial system, so a little bit more 2022, 21st century. So we're doing much more work on climate. I stood up the climate division. It was the first standalone climate division of any US regulator. We issued guidance for insurance companies. We're soon to put out guidance for our banks. We have done a lot on consumer protection. One of the first things I did was I froze check cashing fees in New York. In New York, the methodology was that check cashing fees were tied to inflation. And so the paperwork came to my desk requesting a massive increase in check cashing fees. And I just said no. It just didn't make sense that the fees needed to be increased, and the methodology certainly didn't make sense. So we've proposed a new regulation that would have a methodology much more in line with other states, and would have a two-tiered pricing system so that government benefit checks have a lower cost than private sector checks. So that's currently working its way through the notice and comment period. We proposed a regulation that held consumers harmless when their insurance company was wrong about whether a provider was in network or out of network. So if your insurance company says this doctor is in your network and you go, and it turns out that they're not in your network, you shouldn't be held accountable for that. The insurance company should be accountable for that. So we've proposed a regulation to that effect. We have a proposed regulation out around small business lending. So that's transparency so that consumers and small businesses can better compare the cost of credit. That's incredibly important. So on and on. The team's been really, really busy, and I couldn't be more proud of all the things that they've accomplished.
It was funny when I worked for Governor Rendell in Pennsylvania. We took over after 8 years of a Republican, and I remember the first phrase day in and day out was, "But that's just not how we've done it before." Yeah. And I was like, "Well, how long has it been done?" "Well, the last 8 years." I was like, "Well, this has been a state around for a very long time. We can probably shake it up just a little bit." Yeah. Just curious, why did you start with climate?
Yeah, I mean, for me, it's obviously a huge issue. I just happened to come into my seat right after Ida hit New York. And one of the first things I did was I was out in Queens, I was out in Westchester, I was talking with consumers about the challenges they were having with flood insurance and the economic ramifications that was going to have on their life. And so it made sense. We had a good sort of climate office, a couple of people, but to really elevate that and to really say, what can we do in terms of financial regulatory policy, right? It's a narrow lane, I think, you have as a financial regulator, but what can we do when it comes to insurance and making sure our insurance companies are safe and sound, but they're also giving consumers the products they need. And similarly with banking, how do we ensure their safety and soundness? How do we ensure their operational resiliency? And so to me, it was just a glaring gap in the work that the department had done to date that needed to be filled.
Shifting gears just a little bit, New York State has a very robust limited purpose trust charter. Just curious is how you feel the state should maintain their sovereignty while addressing kind of evolving payment issues that are occurring.
Yeah. So look, the states have been leaders in a lot of ways. I was at an event yesterday and folks were talking about how before the financial crisis, it was really the states that had more robust regulatory frameworks around subprime lending. And then they were preempted. And then we had the financial crisis. So I think states are often leaders when it comes to identifying trends in the financial services space and being able to move quickly to address them. And I think that's been the case for virtual currency in New York. A lot of states obviously don't have the authorities they need to regulate virtual currency. They do it the best they can through money transmission. But for us, right, we have this authority and we've used it and we'll continue to improve it. But one thing that's, I think, very gratifying for the team and for me is when we're out in the world and regulators and policymakers here in DC or folks internationally are saying, we know if a company has passed New York's standards, probably pretty good to go, that you guys really kick the tires, that you have expert supervisors. No framework is perfect, and this space is moving quickly. But I think the regulatory framework that we have has been a good one, and we're eager to share with people what we've learned, improvements that we think can be made, and to continue improving ourselves.
And how do you get the information about kind of how fast industry is moving or where they're going, and how are you anticipating? Do you meet regularly? Do you test products? Like, how do you, as a supervisor, how do you stay abreast of kind of what is happening in the marketplace?
Yeah. So, well, you mentioned my time in the private sector. I think I'm the first superintendent to really have that commercial experience, including starting my own insurtech that went public shortly before I took this job, and so I know how to talk to industry. I like to think I'm fluent in multiple languages, of like the language of regulator and the language of industry. But it's always been important to me that DFS is built on a model of engagement, and frankly, that hasn't really been its reputation historically either, that it didn't necessarily play well in the sandbox with others. But for me, it's been very important that we're always engaged with industry, our regulated entities and otherwise, that people feel like they can come in not just to talk about the particular business they have with the agency, but trends that they're seeing, things that are keeping them up at night. We do that with advocates, we do that with academics, we do that with other regulators. We have innumerable task forces and advisory councils. But we're always engaging informally. We also stood up a program called DFS Exchange, which is sort of like office hours, where companies could come in and describe to us what they were thinking about in terms of new products or a new company, and just get sort of a read of the regulatory landscape. That program has been incredibly successful. I think we launched it in June, and we've already had over 100 companies come in and meet with the team. So I really do push the team and push myself to be engaged with all of our stakeholders, because I truly believe that's the only way that you can make sound, data-driven policy.
One of the themes that we're talking about here today, too, is increasing the ability of fintech companies to increase financial inclusion, to be able to bring competition to the marketplace, but allow retail, other consumers to be able to participate in the financial service. I know this is something that is also in your own personal remit, and would love to say how you brought your own personal into this conversation, and how you think about either both regulating but encouraging industry to be more financially inclusive.
Yeah, I mean, I think financial inclusion, financial health, right, they're terms that we throw around a lot, I think both in the policymaking sphere, but also sort of in fintech and in industry. But in my mind, there's still a long way to go, and I think the numbers from the FDIC bear that out. And there's been a lot of talk in the fintech space about this for a long time, and I'll be frank, I think it's been more talk and marketing than actual results. So there's still a lot of work for the space to do, but the potential is there, but it has to be done safely and in a cost-effective way. But it's a set of issues that are near and dear to my heart. You mentioned I was on the board of the Financial Health Network. I'm also the first person of color in my seat, so I bring that lens to everything we do. What does it mean to be included? What does it mean to be financially healthy? How do you make sure marginalized communities have a good experience with financial services broadly that makes them productive economic participants? Sometimes I have a different view of that than others, but I think there's a long way for fintech to go to prove that. And it's interesting because we have companies come in all the time and they're, we're doing all this stuff for inclusion, we're doing that. And I say, well, how many of your customers were previously un and underbanked, but now are participating in the system? Well, we don't really have that data. All right, well then don't come in and tell me, right, that you're including all these people. Be prepared to back it up. Let us help you do that safely and effectively and cheaply.
Is there certain metrics you're looking for that you would measure financial inclusion against?
Yeah, I mean, I think certainly the FDIC provides a good framework. We're now actually in the midst of a study ourselves about the un and underbanked in New York, so more to come there. But for me, I think about, I really like to think about the human experience with financial services, right? Does somebody trust the service that they're dealing with? Does it make their lives easier, not harder, or less complicated? Can it improve their economic situation in meaningful ways? And there's so much talk when we talk about inclusion about bank branches. Mm-hmm. But when you are affluent, you have a choice. Right? You can bank on your phone or on your laptop, or you can go to the branch. And I think the key for un and underbanked communities and marginalized communities is, do they have a choice? Can they make financial decisions that empower them and are not just the best of a bad set of options? I think often we chalk up a lot of things to lack of financial literacy, which I find particularly offensive. Mm-hmm. To be clear, nobody understands money better than poor people. I would wager that nobody in this room knows the price of milk or which supermarket has cheaper milk than the other or cheaper toilet paper than the other. But poor and working class people do. It's not that they don't understand that payday lenders are predatory, it's that it's the best of a bad set of options for them. So we should stop talking about a lack of understanding and start talking about how we provide people with better options. I think fintech, is a way to do that, but there's still a long way to go.
And you recently come from overseas. And you've seen kind of some of the attitudes that are different about fintech and how it's adopted from both a regulatory but also from a consumer standpoint. Would love some insights as to where you see the U.S. sits as far as in the global realm. Are we behind? Are we ahead? From your vantage point?
Yeah, I think so. I was recently in the UAE and in Singapore, meeting with a number of regulators, and then earlier in the year, I was traveling through Western Europe to talk with a number of the regulators that we jointly supervise institutions with. I think there are ways in which we are ahead. Certainly, when you look at the development of the fintech space, investment in the space, the regulatory thinking and policy thinking around fintech. There are certainly some jurisdictions that are more forward-leaning, but I think they're very different markets than the US. They're often smaller, they may be more homogeneous, right? They don't have the same history of marginalization of certain communities that we do, so it's just a different set of circumstances. But I would say, I always find it heartwarming how much the regulatory community seeks to engage with each other and learn from each other and take the things that work from other jurisdictions and realize the things that won't work for a specific jurisdictional context.
And just bringing it back, we're here in Washington, right down the hill from Capitol Hill.
Yeah.
Little change. We still don't know the full outcome of an election, but do you anticipate, I know you're separate and at the state level, but federal rules and regulations do affect. Do you expect any change given kind of what the atmosphere is in Washington is right now?
Yeah, I mean, I think a lot of folks down here on both sides of the aisle are working very hard to think about fintech, I mean, everybody's thinking about crypto all the time. So, I feel like we at DFS sit in a great spot to be able to come and just try and add value to the conversation, telling people what we've learned, what we think we could do better, things we think we've done well. And for me, it matters less what side of the aisle you're on, what your jurisdiction is as a policymaker or regulator. We're just here to help add value if we can, tell people what we've learned, what we think even we've missed and that we'd like to see as part of a federal framework, and similarly to learn from folks here. And I think it's a nice advantage, being a state regulator, given that you can really engage freely. But again, that's sort of, that's I think reflective of who I am, who my boss is, that we're here to get the work done and make the best possible policy to protect our constituents, and that's it.
And one of the issues that is brewing right now, and CFPB is starting to do formal rulemaking, is on the open banking. I know you've been overseas, and that is a thread there. How do you see that playing out and the importance of creating an open banking system?
Yeah, I mean, I think some of the work that's been done, in other jurisdictions on open banking is still evolving. There was a lot of fanfare about it early on, and it certainly has a lot of benefits. But I think I don't want to call it an experiment, but that work is ongoing, and I think has proven to be challenging in ways that were unexpected. But I think the work that the CFPB has been doing on open banking, the things that they're doing, buy now, pay later, other areas of shared interest, is really important. And it's great when we're able to collaborate or learn from others, doing things, and it helps us with our own thinking on those areas.
And as you look to the future, where do you see fintech evolving, and kind of what your lens will be to prepare for that in the future?
Yeah. My hope is that it will evolve more to the inclusion and financial health side of things. I understand it's challenging, especially when you have investors that are looking for a return, and they have a timeline for that return. But my hope is we will see more and more innovation geared toward marginalized communities, working class communities, folks that are underserved by the traditional financial services system. And I often say, I'm not a fan of innovation just for innovation's sake. What is the objective? And I think companies and industry will find, especially when it comes to inclusion and financial health, that their objectives are aligned with regulators. So I think it behooves all of us to be working together and say, what are the things we are trying to accomplish? What's the end game here? And how do we accomplish that working together as policymakers and industry, versus like, hey, isn't this cool widget a neat thing? And everybody goes, yeah, but what's it for?
Yeah.
Right? Like that doesn't help move the space forward. So I think it really is important for all of us to be working together that way.
And just end on a personal note, as we've alluded to throughout the conversation, you've come from government, you've also spent time in the private sector. What motivates you in your career, and how you're thinking of kind of where you want to move this industry?
Yeah, so I grew up in a house where, to whom much is given, much is expected. And was fortunate to have like a pretty cushy upbringing by a lot of standards. And so that's really the frame I bring to all my work in the private sector and in the public sector. How are you? It sounds Pollyanna, but I really do believe this and live by this, right? How are you making things better for other people. And it doesn't always have to be big world-changing ways. It can be in very small ways every day. You know, one of my mentors said to me when I took this job, and I said, well, this, you know, it's a big agency. It's 1,200 people, and the morale was pretty low, and there was a lot going on, transition in the governor's office and transition with the superintendent. And he said to me, find a way to show up for your team every day. Right? It could be a thank you email to somebody. It could be recognizing somebody in a meeting. And so I try to do that on little levels, but I think about it on the macro level too, right? Every time we are thinking about a new regulation, thinking about guidance, thinking about sending the team out to engage with the ecosystem, what is our goal? How are we showing up for our constituents? How are we showing up for our regulated entities? How are we showing up for each other every day?
Well, Superintendent Harris, thank you so much for joining us today. It's been a pleasure meeting you and having a conversation.
Yeah, thanks for having me. Thank you.